Let's talk about the VA loan first. So this question is for Michelle and Austin. We're going to lay the groundwork and then we're going to get to Q&A. Um, my first question, Michelle and Austin, is tell us elementary style, what is the VA loan in a nutshell?
So I think that there's a lot of people that don't quite understand, right? So the VA, the Veterans Administration in 1944 wanted to figure out how to help our servicemen and women returning from World War II to buy a home. And they decided to do this through guaranteeing the loan to the investor. So what the VA loan does is it guarantees the first 25% of the loan in case the service member or the veteran default. And then VA comes in and pays up to 25% of that loan in a claim to the investor for making that loan to begin with. So that's why with VA loans, you don't have to have mortgage insurance because VA is taking that role of insuring that loan against default with the investor. So that's all it is. VA does not do the loan. They aren't they aren't funding the loan. They're not closing the loan. All VA does is come in at the end of that transaction and guarantee it to the investor.
Absolutely. And so, for those of you who have not done the VA loan before, if you've tried to go get qualified or quoted for a conventional loan, especially if it's your first purchase, you're looking at anywhere from $100 to $300 a month in mortgage insurance. You don't have to pay that
No.
with the VA loan. And that's one of the big perks of not having to have mortgage insurance.